My trading edge. Gonna get into a lot valuable in trading in this conversation. My trading edge. So I've been trading for a little over a year now, not crazy long. And the two most valuable things that I have, aside from having not blown up, but I have a year worth of experience and the intuition that comes from that. And I have over a year's worth of data. And that's the most valuable treasure trove that I have, is I have over a year worth of data of what months I win, what months I lose, what trade setups I win, what trade setups I lose. I believe that is the most important thing, is the data that I have on these are my winning trade setups, these are my losing trade setups. There's a lot more that's valuable. It's helped, like, these are the assets that I perform well with, these are the assets that I don't perform well with, and so on. And I'm going to go into that data here and discuss what works well and what I should focus on according to the data. So I've traded all kinds of setups, I've traded all kinds of styles and systems. And if I look at my data, I only have two setups that have performed very well in live testing. Everything else has been net negative. And some of the things that have net negative, they backtest well, and maybe I've failed to execute them, but execution error isn't just on me, it's on the system. What I mean by that is some of the setups are easier to execute than others, or at least for me, right? So I want systems that are easy to execute. They backtest well, they live test well, easily, right? So I have certain systems that backtest well, and in theory they live test well, but there's obstacles to them. So I have two setups that I've backtested well and traded well with. Now these are the main setups. There's variations of them, but these are the main setups that I traded during 2022, the end, when I was profitable. And I moved away from these setups in 2023, but I'm moving back to them. So why I moved away from them is for psychological reasons that are not the focus of this conversation right now. Really just system hopping and thinking I can outperform, experimentation, all this other stuff. But I'm more and more like, I want to get back to winning. Like, I've experienced winning in multiple chapters, and I have my data that shows me here's not just when I was winning, but how I was winning. Well, let me just go back to those two setups. So that's what I'm going to do. That's what I'm doing. And I started already, and have started. This isn't something I'm going to. I have started already going back to these old setups, and we're going to talk about them, what they are. So there's two setups, and they are very similar, and they trade similarly. They're based on the same concepts. It's two entry models for the same idea. So what the idea is, it's high time frame trading on Bitcoin, which is the most liquid crypto asset and arguably the most liquid asset in the world, not in terms of depth, but in terms of 24/7 trading. For something that trades 24/7, it has the most depth. And it's trying to, something people say not to do, but it's trying to pick exact tops and bottoms with limit orders with a margin of 2%, saying the exact top of this move on a higher time frame is going to be within 2% of here. It's going to be within 2 to 2.5% of here. It's the exact bottom. So how we're doing it, the concept is, and there's two versions of the setup, but it's sort of the same idea. And it's based on we'll get to the chart, but it's based on not just chart patterns, but the metagame of traders, which is where we have resting orders, of which there's two kinds. There's two kinds of resting orders, right? You have limit orders and you have stop market orders. So what I've been doing this year in my unprofitable time and early on in my unprofitable time is just looking at the chart and looking for patterns without asking, like, where are people out of position? Where are whales likely going to enter? And am I okay and willing to wait for price to come to these areas? And it might take days, it might take weeks, it might not even come to that area. But if it does come to that area, it's a super high probability, high risk reward setup. One of these setups, live tested like 40 to 50% 6RR. It's insane. And like, let me immediately go back to that. Everything else I've tried hasn't worked super well. So I'm not so much looking at market structure. I'm not looking at indicators. I'm looking at where are these. So stop market orders are easy to spot. They're stop losses. And I know where stop market orders are just because of what I've been taught and where I put my stops. I put them just within an old high, just beyond an old high. I put them just within an old low, just beyond an old low, at an old low. Especially a daily low, especially a daily high, especially a weekly low, especially a weekly high. So what happens when price reaches these areas is stop market orders are triggered. And when stop market orders are triggered, people are forced to transact. And when people are forced to transact, they're at a disadvantage. And if someone's transacting at a disadvantage, if you're on the other side of them, you're at an advantage, right? If they don't want to sell and they have to, that's a good place to buy. In general, if they don't want to buy but they have to. So stop market orders tell you where price is overextended based on liquidations and likely to come back. So maybe we could say that price had a rung of highs like this, right? And you could look at it from a breakdown perspective. You could look at it, there's liquidity above each of these highs. Price starts to move higher, right? Liquidations pushes price higher, liquidations pushes price higher, liquidations pushes price higher, liquidations pushes price higher. People were forced to buy this whole way. They didn't want to, they had to, because they went short down here and they were forced to cover. They would have preferred not to. Now, the people who went long down here also, they have limit sells up here at this high and just beyond it. So this is one area where we can see limit sells. The idea, the edge is to transact against forced buyers and sellers with optional limit buyers and sellers. Like if I went long down here and I'm selling up here, that's an option, that's a choice, it's a position of power. I want to align myself with the position of power. So what happens is when price goes to this area, it doesn't make sense to keep going. Now, maybe it's a higher high, and maybe we have an upward market structure. Yes, but I'm not thinking about it like that. I'm thinking about it like the conditions that got price to where it is was not from spot market buying, but it was from forced selling or forced buying of shorts having to cover. And then now we have a condition of traders taking their profits up here. Okay? So that's the first and most important concept here is stop market orders and trying to be on the other side of them or wait for them to sort of start to finish and then to enter. Now let me draw this again. It's also, if we know that if price passes here, there's going to be all kinds of forced liquidations to the upside. I also want to be holding long here. I want to be holding long here. I want to be holding long here. I want to be holding long here. No more forced liquidations. Let me cover right here. So I also want to be a buyer down here when, guess what, there's probably forced sellers down here who I can be happy to buy from. So the other tool that we want to look for is limit orders. So limit orders, people in a position of power, and also whales. You think, and professionals. Professionals, people with discipline, and especially large traders are much more likely to use limit orders. If you have a $10 million position that you're trying to get involved in the market and get invested, you're trying to say buy Bitcoin with 10 million, you're not going to $10 million market buy. You're going to slip so badly and lose. It's going to be terrible, right? You're going to set limit orders at key retracement areas. And ideally, you're going to set limit orders where people are forced to sell into you, so it creates volume where you get advantageous pricing, right? This is how large traders not think, but have to operate in the market. So we want to align ourselves with these limit orders and avoid aligning ourselves with and avoid a lot of the noise and other things that happen in the day-to-day in the market. So where can we find these resting limit orders? So one is say the market did something like this and it's coming back. Okay, under here, there was forced selling. Perhaps there's limit orders. Depends what was over to the left here. It always depends what was to the left. Here, let's say there was forced selling. Whales built their positions. Right, there's forced buying here, 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 here. And there's also a high up here. Okay, where's price likely to go before it reverses? Where is... Okay, better question. We know where the stop market orders are. There's going to be one down here now too. But see, the thing is, price likes to move where it's going to liquidate the most people. Right? We might sweep this once more. But price really wants to come up and sweep 1, 2, 3, 4, 5, 6 days of traders more than it wants to sweep 1 day of traders. That is our assumption. Now, there might be past price history down here where there's another low and another low. But let's assume that, hey, we took the major target. So we know if you went long down here, you're setting your target here. Maybe you have a runner up here. But for the most part, you're setting your target just above this high. So that is a limit order. It's a limit sell. Now, so we can say that limit orders are occurring past old highs and lows, where there's not a lot of taking profit in here. You're aiming, your main position, you're aiming for this, right? You might be taking partials in here. Traders, when I say you, I mean traders. The professionals, but for the most part, they're aiming up here. So we can expect that this area is a good place where we could predict that price should come up and then have some kind of a reaction, because the conditions for the move no longer exist and will instead favor a move down, right? So there's two kinds of limit orders. The first one is the take profit. Now the second one is where traders are entering. So here's where something is really something that's quite interesting called a fair value gap. Okay. Here's a bearish fair value gap. Wick and body. Right? Wick and body. Okay, say price is doing something like this. So we know the stop loss is here, the stop loss is here, the stop loss is here, 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 and here. But another thing that we notice is right in here between this low and this high is what's called a fair value gap. And the idea here is price essentially gapped down, and by gapping down, the sellers overwhelmed the buyers. Market sellers overwhelmed the buyers, right? There were limit buys and there were market sells, right? A huge displacement, a streaking candle. It's caused by market sells. Some of those may be stop market sells, right? So what didn't get filled in here? Who got filled in this? Stop market sells got filled. Limit buys got filled. Market buys probably got filled too. Stop market sells got filled. What didn't get filled here was limit sells, because price moved too fast. As price is moving down, the limit sells start to populate. Where, hey, if I get a retracement, I'm going to limit. So they didn't get filled because price kept going for the most part. So what's going to happen when price comes back up here? Into a fair value gap. The limit sells are still here. So we're going to encounter limit sells. We can align ourselves with those limit sells by looking for fair value gaps on the chart. Especially, we want to look for fair value gaps beyond major liquidity targets that are a chain of highs and lows. Those are where the high probability trades. And the goal is to just wait for everything else in between. So those are the higher level concepts for this setup, these setups. The next thing I'm going to do is we're going to go into the actual setups themselves. First, let's talk about limit orders, execution. So the advantage of limit orders. So both of my setups use limit orders. It makes sense. So a lot of traders will say, well, I mean, you can use limit orders, but like you shouldn't just limit at a level, wait to see things on the lower time frame to tell you. That hadn't been necessary for me in both my back testing and my live trading. My experience, so much of what happens on the lower time frame is noise. The only thing that's really interesting on the lower time frame is when there's a massive wick on the 1 or 5 minute that's super high volume. That can help identify a major turning point. But for the most part, and that is something we look for. For the most part, though, I haven't found it unsafe to just limit order in an area. I mean, you have a stop loss, and in the worst case, you get stopped out. Maybe you get back in later, maybe it runs without you, maybe you don't trade it. But there's a couple advantages to limit orders. The first one is that you don't need to be there. That's huge. You don't need to be there. Another advantage is we're entering at the turning point in the market of where we predict there's going to be a turning point in the market that is caused by what? Volatility. There's going to be a lot of volatility. We're expecting price to be moving quickly into our area before reversing. Or move quickly into our area and then wick up and fill us before reversing. Regardless price, we expect price to be moving fast. So if price is moving fast, first of all, it is from an execution and technical standpoint very difficult to enter, because a lot of the times these fills will be on a 1 minute wick. And trying to sit in front of the computer and time it, it's a lot harder than limit ordering. And also significant is trying to sell a 1 minute candle that is just going straight up, psychologically difficult. trying to buy a 1 minute candle that's going straight down, and also to do it and it's correct because you waited weeks for the right area, it's super hard. But setting a limit order prevents for a lot of the execution errors that occur. So limit order will give you a better entry more of the time and reduce a lot of different errors that can happen. And if you wait for more confirmation, that can be a way to get in after the turning point, which is probably fine, although I don't have a lot of data suggesting that that actually works that well for me in practice. But when you market order, you either have to have incredibly fast reflexes or you don't get a good entry. It's one or the other, right? You don't get a good entry on just waiting. Like if I'm these systems where I'm market entering at the daily close, it's very rarely good entries. What percentage of the time is the best entry? 2 p.m. exactly. Very low, very rare, right? You get more confirmation, whatever, but limit orders give you much better entries, and with fewer possible execution errors. So now let's get to the setups. I have two I'm going to highlight. I have a third one, which maybe a couple more variations of them. But so the first thing is we're waiting for price to form a range. Okay. With a liquidation ladder on both sides. And the expectation is whichever way it goes is going to be a good counter trade. I don't know which one it is. Let me just wait. So setup number one is the 1 day exhaustion. And what makes it even better is, say there's a high up here. There's a high like right here. Okay, we're going to wait for price to do this on a 1 day. And then, so what has happened here? Okay, well, we have a lot of longs left behind. We have forced buying here, forced buying here, forced buying here, forced buying here. And then we're going to have limit sellers taking profit up at this high. And we're also going to have limit whales just selling in this zone because there's a lot of liquidity and volatility and volume in the market. So the way the first system works is for Bitcoin, I'm going to limit sell 0.5% past with a 2% stop loss, and I'm going to target the lows of the range. And I'm going to expect that there's going to be a small wick that's going to take out these early shorts or over leveraged shorts. But the conditions that cause price to go up shouldn't continue, and then we're going to come liquidate these people. We're trading the daily chart. The setup comes up 6 times a month, 8 times a month, sometimes 4 times a month. You might only get 2 winners a month, but it has a decent win rate, close to 50%, and the risk reward is extremely high, like 6R, 8R average. And I got away from it because, yeah, for psychological reasons. A lot of it had to do with like, oh, it's not enough trades, or that was my starter system. I could do better if I go to a lower time frame, which hadn't been true. So now it's just like, no, let me go back to what worked really well. Okay, now there's another variation of this that has sort of advantages to disadvantages to it, and also I'm interested in, both of them are good, so which one I trade doesn't matter as much. I want to see them in confluence, though. If both of them work at the same time, that's always a good sign. So this one, Okay. Say there's a gap right here, right above all these, where limit cells didn't get filled, and there's going to be limit cells of take profit, and there's going to be limit cells of whales. When price is down here, I'm just going to go ahead and do something like this. Or my entry might be at the front of the gap, but the idea is sweeping a gap. Like there's going to be forced buying as price comes up into optional limit selling in here, elective selling, and I'm going to predict that we're gonna top somewhere in here, and if that doesn't work, then I can try the same setups up here, right? There's a gap up here. This one is similar to the other one in that you're picking an area on the chart that is a high time frame area, and you're waiting for price to come there. And these gaps that I use on this setup, 4 hour or 1 hour, we're gonna get to the next setup. I don't like to go lower than 4 hour or 1 hour. The reason being that from studying a lot of different charts, depending on the exchange, the lower time frame price action is quite different. So if I'm looking at Bybit versus Coinbase versus KuCoin versus Binance, the 5-minute gaps are not the same. The 1-minute gaps are not the same. But the 1 hour and the 4 hour gaps are typically pretty close, right? The daily highs and lows are typically pretty close. So that's a reason I don't like to trade the lower time frame with limit orders and in general. So there's two other, okay, so those are the predictive. Then I have two reactive setups. So okay, so we got something like this, and price takes this high, right, that we've been waiting for. And say I didn't get filled on my limit order. So if we're to zoom in and price does this, and this was the level that was swept over here, I'm going to set a retracement over here. The condition that I was looking for happened, and price is reversing without me. Let me try to get into the trade. So this is my inside ladder setup, and this is what I did a lot of this year. That, and I also tried market selling these, which I don't like. It's too many problems with that. But the inside ladder back tests quite nicely, but it didn't forward test well for me. It's a little bit too reactive, where when you're trading these 1 hour and these 4 hour gaps, typically you have just checking the chart once a day or setting those limit out, or not even once a day. Like oftentimes it takes days for an idea to get filled. But these just have to be a little bit too responsive. For whatever reason, it hasn't really worked great for me in the data. Again, it backtests great, but so I'm moving away from that a little bit. Or yeah, I mean I'm doing less of that. But that's a way to chase if the conditions I was looking for happened, but my margin of error just didn't work out. Either I got stopped out or I didn't quite get filled in my limit order. So there's one more version of this. And this one, I think I probably would prefer it to inside ladder, depending. but I have not been able to I don't have much live data with this one, but that would be, okay, say that the price is moving down, and we have some old structure over here, right? Okay. And we have our liquidation coming down. And we hit our target. And price closes below. And maybe I would try my daily long here. And maybe I would try my fair value gap entry here. But maybe it doesn't get filled, or there's reasons why I think maybe I shouldn't take it. And then price does this. It reverses color. It leaves a big wick. It creates a pin bar. So I could go into here and I could limit on a retracement. Or, depending on where we are, I can just market order. Just market buy. And say, hey, this isn't the perfect entry. This would have been the perfect entry, but the conditions I was looking for have occurred. So that one, I'm okay trading that. Yeah, I'm okay with trading that if the others fail. But again, it's the same high time frame thing where you're waiting for an area. Something happened in that area. You're not trading inside the congestion. Now, there's another setup which I just have not had very much success with. Although there's times when it will be good, and that is breakouts and breakdowns. I haven't had good experience using stop market orders, and I believe a lot of that just has to do with the way price moves. Like, price wants to move to an extreme before counter moving. So in my experience, it's way too often when I set a stop market order that I get the worst possible fill. Like, it comes and fills me right before reversing. The idea is you're buying before everyone else is forced to buy, though. So price comes up here, and I'm going to buy like this for an add-on. I haven't had great experience with this. I can look at areas in the chart where it would have worked great, and it's something to keep an eye on. I just haven't done particularly well with it. Part of it is because price likes to just do this as it moves up, and it just doesn't go that far. And if your entrance was in the scrum of things, it's too easy to get stopped out, especially advancing your stop. But if you're enter at the lows, it's a lot easier to sit through some of these moves. So yeah, those are the main setups, and what I'm going back to is limit orders, pick areas on the chart where there's a lot of liquidations and a lot of stop market orders in the same place, and just trying to wait for those, and knowing that I've been profitable before doing that, and I have the data, and that's the only thing I've been profitable doing. So why don't I go back? I'm just going to go back to that, right? Like, I can literally go back to, I've resisted this. I've really resisted just going back to the setups that worked. Why not? Why not just go back to the setups that work instead of trying to figure out new stuff? These setups work. They work well enough. So that's my game plan, man. Much love and peace.